your FX educator here on behalf of FX Street. Welcome back, everybody. Good to be here. ECB day today, right? And looking at a 5-minute chart of the euro. 23 minutes from now, Draghi's press conference begins. But what happened already? You can see how quiet things were overnight, right? And then suddenly, explosion of volatility, right? The euro blasts through 108, almost up to about 108.70, and is now at 10. Goes down to 107.40, and it's now trading at about 107.60, which is approximately where this whole thing started. First and foremost, let's review yesterday's setup. Now, I'm going to go to the 15 so we can see it. We put a setup in yesterday for Euro USD, and the game plan was here's the entry. The price has to come down. So this is yesterday morning. We were in the room yesterday. Right here, the entry is going to occur, and then what happens? Not much of anything. All right. Actually, the entry occurs here. I'm sorry, on the 15-minute chart. So we get short Euro USD. We're down a little, we're up a little, and as the night drifts on, it's basically a break-even trade. So before I went to bed last night, I closed it out. You can see we entered short at 107.20. By the time I went to bed last night, got out at about where? 107.20, right? And that's that's the way it goes sometimes. You don't want to hold these things into big events. Right? And this is something we talk about constantly on here. You don't want to expose yourself to these big events. So when we entered this trade yesterday, we said, well, no matter what happens, we have to be out of it before the ECB tomorrow morning. And the ECB already did put out some interesting information. You can see that it's going to be, if you look at this, boom, huge candle, right? Huge shot up, then down. What did they say exactly? Well, they left interest rates alone, but they're tapering. They announced their plan to taper their bond purchase program, or asset purchase program, however you want to call it. Bond buying, asset buying. They're going to taper that program. And what does it mean to say tapering? Well, they were buying 80 billion euros per month. And now they're going to knock it back to 60 billion euros. So they're cutting it by 25%. Of course, look, is it really working? I think it's debatable, as to whether or not any of this does any good at this point. If you look at the most healthy, normalized economy appears to be the U.S. and UK right now. And the U.S. is the only one that's raising rates, and their economy actually looks like it's getting better. Great Britain's is supposed to be getting worse because of Brexit. It actually looks like it's getting better. Everything seems to be counterintuitive right now with economics. Of course, now this is just the hors d'oeuvre, right? They did what they did today, which created a ton of volatility, which is why you don't want to be in the trade when this happens. There are really only 3 events that create this type of volatility. That's this meeting, the ECB meeting, which is approximately every 6 weeks. The Fed meeting, FOMC meeting, which is basically the same thing, except one is the European version. Today we got the European version. Next week we get the U.S. version of the exact same thing. And the U.S. version will happen on Wednesday of next week, so be aware of that going in. The third item that creates this type of volatility is the non-farm payroll report. We had that last week, and it really didn't create a whole lot of volatility. So the European Central Bank has lowered the asset purchase amount starting in April, but they're going to say from April till December. They're going to, from April to December, they're going to buy 60 billion euros worth of bonds instead of 80. So what's this doing to things like treasuries? Here's the U.S. reaction in U.S. treasuries. So you're seeing a reaction is not just in Forex, right? This is the U.S. Treasury reaction. So if treasuries are plunging in value, That means yields are rising in value. That's bad news if you're looking for a house. Yields have been rising, pretty dramatically in the U.S. Really ever since the election for about a month now. I guess the election was pretty much exactly 1 month ago today. So, yields, but look at yields just jump off a cliff there. That's on a 15-minute chart. I'll make it a 60, and you can push it back a little bit, and you can see so when the price of bonds falls, as you see happening on this chart, see bonds and bond yields have an inverse relationship. The lower the price of the bond, the higher the yield. You're looking at a chart of the price of a 10-year U.S. Treasury. As that price drops, the yield goes higher. So a 10-year Treasury probably yields 1% more now than it did a month ago, or in that area. Okay, so, all of this activity shoots up, shoots way down on the euro, but really it ends up where it is. Really ends up where it started, I should say. Interesting thing, though, too, is that the euro itself has lost a fair amount of ground. So you could say that purchasing 60 billion euros today, it's less than 80 billion euros, but the truth is it's less than 60 billion euros a month ago because the euro's been down, right? There's the euro. Now, it's an interesting look. Here's the euro coming down. It looks an awful lot like treasuries. I'm going to insert treasuries. Watch this. Let's change this to the futures contract at EC. Right there you see the futures contract for euro, correct? And it's this big rise and then a sharp drop, and it looks like it could be a rounded bottom. And now you look at treasuries at TY. Look how similar this is going to look. It's the same chart. The euro and the 10-year treasury are tracking each other right now. And the 10-year treasury seems like it wants to go lower. I'll make this daily. Right, there's your daily on the treasury. This whole drop is since the election, right? We were at 129, the price, now it's close to 4, and so as that price has dropped, the yields have gone up. But the euro has not fallen as dramatically, but there it is. Since the election, it was 111, and it went down to 106. The only difference is the euro has had a little bit of a rally the last week or so, right? And the Treasury has not. The Treasury has not rallied. But it's a very interesting juxtaposition. There's a trade in there, gang. I just have to figure out which one is the dog and which one is the tail at this point. If the euro is the dog, then it's time to buy Treasuries, that they're oversold. And I suspect that if I check my RSI indicator, that they're not just they're definitely oversold. Look at that. That's a buy signal on treasuries right there. Huge drop. So that huge drop creates a huge oversold signal on the daily. It's literally, now oversold does not mean buy. This is really important. People look at oversold and they say, okay, this is green. That means it's good to buy. If you buy here, which is where it turns green, right? If you buy here, what happens? It does not work out at all. You see, this is not a buy signal. The buy signal occurs when RSI turns and rises above 30. This is relative strength index, RSI. The bottom line represents 30. The top line represents 70. When the price goes above 70, it's overbought, and you see it turn red. When it turns downward and comes out of overbought, that's a sell signal. This one here, not a great sell signal. This one here, a perfect sell signal. Imagine selling. So this one, you're going to get stopped out right here. This one, you're selling at the top. You should make a lot more. You should lose on this one, but you should never lose big. If you can sell the very top, you should make a lot. So you're going to win one, lose one, but the one where you win should be much bigger than the one where you lose. We haven't had a buy signal on the 10-year since 2015. Look at this. This is November of 2015. Do you wish to forget that it's a bond it's a bond, right? But don't matter. It doesn't matter. It doesn't matter if it's a currency, a bond, or a stock. Don't you wish you bought it here and put a stop under this low? How did that work out? Pretty darn amazing. That's the very last time we had a buy signal on the daily chart. And now what are we getting? We're getting a buy signal on the daily chart. You know what I'm starting to think, gang? I'm starting to think maybe the euro is the dog and the 10-year treasury is the tail. Maybe the dog is now running away. It's turning and heading north, and the tail is going to follow. Because now we're getting a big old buy signal here on treasuries. It's very counterintuitive. It goes against the trend. But I do think it could be potentially very effective. When I do see a strong trend, I do like to look at my moving averages. Let's go moving average exponential. Right, there's your 10 moving average. So it's saying sell and sell and sell again. It keeps hitting it and dropping. Now, at some point, it's going to break through and head the other way. That point could be now. This is giving the buy signal, and you can see how the candles are beginning to creep through. That moving average. And that moving average, which was so steep before, and worked beautifully right here, by the way, to sell short, and worked very well here. But now it's flattening out, right? It's flattening out. So the shorting party for treasuries, I think it's over. I think it's time to buy treasuries, believe it or not. I know it's counterintuitive, with interest rates going higher in the U.S. almost certainly next week, right? We've got a Fed meeting, and almost certainly interest rates are going to go up. So bonds should go down. Why, Ed? Why do bonds have to go down just because interest rates are going up, right? Because if interest rates go up, then the new bonds that they print are going to have a higher yield. That makes these old bonds with a lower yield less attractive. And so the price has to drop so the yield can come up to where we think the new bonds are going to be yielding. That's why the price is dropping so dramatically. But you know what? It looks to me like it could be overdone. It's a buy signal for treasuries. It's counterintuitive. Nobody else out there is saying buy treasuries. I think you can do this as a low risk trade, which is why it's appealing. Because if you think about it, right, we can get rid of that moving average now. So we know that there's a buy signal right here. Let's say that we bought it here. Like the current price is right about here. And we put the stop under here. Here, let me fix this up here. So make that stop red. And make that entry green. And then we're going to have targets. I don't even know. I haven't picked the targets yet. But we're going to have at least two, right? And we'll make them blue. It's really color code. I like to color code everything. Entries in green, stops in red, targets in blue. Right? It makes it easier to visualize everything. So let's do a little background dragging here. Okay. Stop needs to be under that low on treasuries. Where are we going to put these sell orders? This resistance all the way up here, you're asking an awful lot to have this make back all of its losses. I think that's asking an awful lot. I think we could ask for less. And still have a very profitable trade, potentially. Right? Now, if you're not a futures trader, we can do this in an ETF also. I'll show you that in just a moment. Would you say that it's the same story for the German Bund? Sandy, that's a great question. I think it could be. I mean, everything is starting to turn, but I'm not sure if it's time for the Bund yet. But one thing I noticed, and we'll come back to this chart, but one thing I noticed, check out Deutsche Bank, which looked like, honestly, it looked like death warmed over there for quite a while. Look at Deutsche Bank. Deutsche Bank's overbought. And this looks to me like a great big inverted head and shoulders. Or maybe, yeah, maybe. Maybe not the best example I've ever seen. But there's left head and a right shoulder and gone. It's broken out. Deutsche Bank breaking out. And you could say this. You could say that if really Deutsche Bank was the one thing I think that worried people enough that they just had to own bunds. They had to own German bonds, or what we call bunds, right? They had to own bunds because they were scared to death of the systemic risk posed by Deutsche Bank. Systemic risk means this. If Deutsche Bank goes, it's taken a whole bunch of other companies with it. If Deutsche Bank goes under, it has to be bought out. It can't. It's too big to fail. And it is literally too big to fail. All right? You can't allow it to fail. But that is a massive breakout. This was a stock that, just looked like the world was coming to an end. Isn't it funny how all of a sudden now it doesn't look like the world is going to end? And where did it really pick up? Oh gosh, look, big gap up on the U.S. election, turns green, pause, and off we go, and never looks back. You could also look at this area and say, this is your flagpole, your flag, and your breakout. It's a really nice. Here, let me dump this. Let me dump this one. We know the inverted head and shoulders is bullish, but also bullish here, right, is this guy. And we're going to just put a parallel line. You can see it, right? There's your flag. Right, so there's your flagpole, there's your flag, and away we go. So it looks to me like, I'll bet you if Deutsche Bank is doing this, and isn't it amazing? It's really not going anywhere until the U.S. presidential election. What is that saying? What is that saying? Similar to Wells Fargo, says Sandy. Sandy, you follow the banks pretty closely. Yeah, it does look a lot like Wells Fargo. I would say Wells Fargo maybe looks a little bit more like a pennant. Now, why do you think, but it's the same deal. A pennant or a flag pattern doesn't really matter. What really matters is this is the same pattern. I wish I'd seen these earlier, quite frankly. They're very exciting. You know that Dodd-Frank, which was passed in 2010, and it's a lot of regulation on the banks. Now, it's never so simple to say regulation is good or regulation is bad. There are good regulations and there are bad regulations. And there are a lot of regulations in Dodd-Frank. I'm sure some of them are good and some of them are bad. But what's indisputable is it is a handicap on the banks to have to work around all these regulations. Trump has said that they're going to dismantle Dodd-Frank, which is just amazing news for banks. Of course, Dodd-Frank only applies to the United States. It has nothing to do with Europe But all these banks are multinational banks. Deutsche Bank does business in the United States, right? So, you look around, these European banks. Look at this one. There's Credit Suisse. Huge breakout. Credit Suisse, I don't even know if they do any business in the United States at all. But they're all going along for the ride, right? Royal Bank of Scotland. Looking a wee bit. Now this one, look, the Royal Bank of Scotland not joining the party here. Not joining the party. I think the British banks, there's a lot of fear that Brexit is going to cause many banks to move some operations out of the UK, and that it might hurt. Let's put it this way. We know that there's a fear that Brexit is going to hurt the UK economy. And really, banking is the biggest, most important part of, maybe not the biggest, but definitely the most important part of the UK economy. Consider this. The global financial crash, the Great Recession, 2008, 2009, centered around the banking industry. And it hit all the countries in the world. But you know what? Australia did not go into a recession. Why? Why did Australia did not go into a recession 2008, 2009, even though the Australian currency fell 40% in a couple of months? Well, why do you think Australia did not go into a recession? Could it be because there just are not a lot of big banks in Australia? In fact, there are no really big banks in Australia. Now, the U.S. went into a recession. Recession is defined as 2 quarters of negative GDP, 2 consecutive quarters of negative GDP. But who went into the deepest recession? The UK. 6 consecutive months of negative GDP in the UK. Why? Well, it's the same reason why Australia did not go into a recession at all. Banking, not a big part of Australia's economy, which is a mining economy. Banking, a huge portion of the UK economy. See Mr. Draghi getting ready to take the stand here. He hasn't said anything yet. Let's jump over to the euro. Anyway, fascinating question. I know it sort of led us on a tangent there. JP Morgan, even more impressive, huh? Okay, so here we go. That's the 1-minute chart. Draghi is sitting down at his desk and shuffling his papers. Man, what I wouldn't give for a glitter bomb right now. I don't know about you, but I think glitter bombs are entertaining. I love some entertainment with my economics. So, he's clearing his throat. What's it going to be? ECB? Okay, he's speaking now. While he's speaking, I'll tell you what, we'll give him a chance to get warmed up over there. While he's kicking it in, I'm sure he'll move the market while I go away, right? But let's just check really quick on other economic stuff today. Because we all know about Draghi. We all know he's in the house. What else do we have happening right now? Just a lot of stuff out of Canada. Actually, a lot of detailed stuff came out. Jobless claims in the U.S., 258. That's exactly in line with estimates. No big deal. Monetary policy statement, that's just starting up right now. And a lot of Canadian statistics, if you're trading Canadian dollar. Most of these Canadian statistics, look how strong the building permits are. They're looking for negative 0.7. They get positive 8.7. And housing prices jumping up, building permits jumping up. So housing market in Canada looking a little bit healthy there this morning. Other than that, no real news right now. A little bit later on, we get really nothing. There's really not much happening later either. Nothing really till tomorrow. So let's focus back on Draghi. Euro's starting to tick lower right now. Euro's falling. He says the current monthly pace, we already know, from 80 billion euros down to 60 billion euros from April through December. So he's going to keep buying 80 billion until March 17th. So we're getting more details here. He's going to keep buying bonds. The ECB will continue to purchase assets, mostly bonds, at the same pace till March 17th, and then it kicks down from 80 to 60. But they've reserved the right to expand it again. In other words, if things get bad again, Draghi is saying, we will change it so we can raise it back up from 60. So we're cutting from 80 to 60 per month in terms of 80 to 60 billion euros purchases. But we'll bump it back up if we feel that we need to. And we'll also lengthen it. We'll put it out longer. They lengthened it today out to December of next year. So he's ready to act if needed. He's going to keep doing QE until inflation is consistent with the target. So until he gets the inflation rate that he wants, he's going to continue doing QE. To adjust the parameters, he's going to adjust parameters as he sees fit. So interesting, right? They cut from 80 to 60, but reserve the right to say, well, we can always bump it back up. Okay? So a lot more to come from Mr. Draghi, no doubt. ECB will buy assets that yield below the deposit rate. They will buy negative yielding bonds, says Draghi. They will buy maturities as short as 1 year. So it looks to me like he's expanding the parameters of the purchases. Even though the amount of euros that they're going to spend is dropping, they're expanding the parameters. They are willing to buy negative yield. They are willing to buy 1 year bonds. Anything from 1 year to 30 years. Okay. Interest rates will stay where they are or go lower for an extended period. Now, something like that you would think caused the euro to drop. But it's not dropping. He says interest rates are not going to rise. They might go down further from zero. Okay, this is going to go on for quite a while now, but nothing he said has really jolted the market yet, which is interesting. I think he said some pretty rad stuff here. Okay, he says the economy is improving. Oh my God, how many times have we heard that one? You know, if the economy is so great, why do you have zero interest rates and a bond purchase program and you're going to buy stuff with negative yields? Can't be that good, right? Okay. All right. Let's leave Mr. Draghi for now because this session is coming to an end. But let's let him talk for a while, and then let's meet up back here in a half hour. We'll shake it out, and we'll see if there's a trade in all this mess. Okay? All right. So I'll see you back here in a half hour. Until then, this is Ed Ponsi, your FX educator, saying thank you for listening. I'll see you back here in about 25 minutes. Take care.